Greetings, members one and all of the Salivation Nation. The Ides of March with silver daggers likely failed. Let's explore! As most of you are aware, I posted a video a few days ago about the next 3 days being critical in trading for silver. Well, we're at the end of that period now, and now decision day is among us, and how this is going to play out, well, we're still kind of waiting to see exactly what's going on there. But we're going to take a look and see with a perspective from another organization. As we see, these prices are down. Most people attribute this to manipulation, and we'll talk about that here. But again, in my video, I kind of warned against getting your hopes up too much about what's going to be happening with the trades in March. You know, are we going to be able to break the banks? And the COMEX being at the center of all of this here. This is coming to us from Sprout Money, this blog posting here. And I think it's quite intriguing, and I agree with a lot of it. I think this is something to take into account. But keep in mind, too, that what you're going to hear in this particular post is coming from a dealer. Yes, they do deal. Now, we all know about what the squeeze attempt was about. It mainly centered around the SLV, but it has kind of shifted since it was kind of brought up in the Wall Street Bets Reddit posting. It has now moved and shifted to the Wall Street Silver, as Wall Street Bets has been somewhat hostile towards a silver short squeeze, whereas Wall Street Silver has really blown up in recent days here. In fact, just over a month old, or almost a month old now, and it's well over 33,000 members strong. And so this is where we are at and moving as we look at March here, the first big month here to kind of keep in mind and see what's going to happen. Will they continue? We'll find out here. As is often the case, there's a lot of hype regarding the impact of the silver squeeze movement might have on the delivery process at COMEX in March. The purpose of this post is to not discourage you, but instead brace you for how the month is likely to play out. If you're new to this heavily manipulated market, and manipulated is a term that's used very loosely in this community, I've defined it into two categories, because I do believe in manipulation, but I believe in micro manipulation, which I define as being manipulation that occurs from within an organization in order to profit. And you can profit when the silver prices move up as well as down. Typically, it's a short-lived manipulative actions and involves spoofing. Now, there's another macro manipulation that most members of the community believes occurs between organizations in order to suppress the price of silver. And that is a trending trending topic and idea that is going around more and more. I don't believe there's evidence for it, even with all the shorts that we're talking about from the Commitment of Trade report that come out. I believe the natural market forces play a much larger role, but don't discount what happens behind the scenes with some of these banks in order to profit for themselves. There are 5 months of the year that are considered delivery months, and this is something that's key to understand here. The futures contract for these months serve as the front month for trading purposes. These months are March, May, July, September, and December. The current front month is the March 21. I assume that means 2021. Trading has been focused on this contract since December 20, December of last year, when it went off board and into delivery at the end of November last year. Before that, the September 20 was a front month until it went off board into delivery back in late August, and so on. There's a process and a schedule for moving the front month contract off the board and into delivery. That schedule can always be found in the CME Group website. So making sense of that is you have to understand how it's fronting and backing for. So here's March 21, April 21, estimated volume, prior day open interest, and the like. And you see there's some pretty big numbers here for April 21. Making sense of what these are and what they mean is a little bit beyond my scope of understanding, because you see how these numbers and they zero out. This is obviously way down into the future. December 26, I assume, means December 2026. A lot of this is based off of futures. The first event is the expiration and pricing of options on the front month contract. This typically occurs 2 to 3 days before the contract goes off the board. For the March 21, the options expired at the COMEX close on Tuesday the 23rd, which is past. So that means it's closed out. There's almost always an event where the banks manipulate and manage price to their advantage. And some people feel that's why we saw the prices go down in recent days here. At TF Metals report, we had been expecting a Tuesday closing price near $27.50 and definitely below $28, and that's precisely what we got. And it says imperative you keep in mind that this is March 21 silver expiration week. The options expire at the COMEX close, and the remaining open interest offers clues as to where the banks might prefer a price. And so there is where this suppression comes into place. And you can see it's been expected and it's happened here. And so there it is. And the chart kind of shows it. The sweet spot is between $27.50 and definitely under $28. For silver squeezers, the next day key event comes on Thursday the 25th. That's today, when the March 21 contract goes off the board and into delivery. What does that mean? After the COMEX close on Thursday, anyone still holding a March 21 contract will be on notice that they may have a contract delivered to them to show that you are financially capable of taking or making that delivery. The contract holder must show 100% margin in their account. If you are an active trader on margin, you'll likely want nothing to do with this, so you will liquidate your March 21 position and roll it to the next front month of May before Thursday's close. If you are seeking delivery, then you will fully fund that purchase by late Thursday, and then you will wait to get your warehouse receipt, which you hope will be able to convert into actual physical silver in as a short period of time as possible. The March 21 contract will continue to trade through the month of March, but only to entities with a full 100% margin funding their account. As the month progresses, deliveries of warehouse receipts will be made against the remaining open interest, with shorts delivering issuing to longs stopping. So that's why we probably won't find out for a while to see how this is going to play out. Then as March comes to a close, all remaining contracts will be settled out, and the focus and process begins again in late April for the May contract. And this is quite interesting information. Helps me understand a little bit better how this plays out in terms of the timing. But obviously there's a lot that kind of goes on behind the scenes. And actually a member of the community was very kind to send this to me to help, because I think he agrees with me with how this stuff is done and hyped up. And in fact, I've had somebody comment on my video about the 3 days being critical. Yes, and I think they kind of were critical. Doesn't necessarily mean this means that I was promoting the idea that everything is going to just crash at the COMEX. So when you read the hysteria and the usual hype merchants about the possibility of an imminent COMEX collapse, understand that this delivery process has been taking place since precious metal futures trading was first introduced in January of 1975. There hasn't been a failure yet. In fact, people have predicted this in the past. And they said the timing of it, and it also was gold, which is why I always look at that stuff and just brush it off, which is why I said I would eat crow if we saw silver hit $50 an ounce during this period. There's unlikely to be a failure in March because the rules are such that a delivery failure is nearly impossible. Let me read that to you again. The rules are such that a delivery failure is nearly impossible. They've got a lot of stop gaps and switches they can flip to make sure that doesn't happen. Now, what is possible is a global run on physical metal. We'll discuss that in a second. However, if you are in this for a quick buck because someone on Twitter or YouTube told you that the COMEX is going to collapse next month, you're going to be disappointed. That's right, exactly. I agree with that statement wholeheartedly. While it's possible that Someday, 40,000 contracts will remain open. 200 million ounces, by the way, that's what that is. And standing at first notice day, when the delivery month contract goes off the board, the numbers for March don't make it appear that it will happen next month. Below is the actual data from the CME Group website as of Monday, the 22nd, on this day, where there are still 3 trading days left remaining before the March 21 goes off the board this coming Thursday. So this is a couple days old, but we can see here this gives an idea. Kind of wish I would have ran across this post before, because I think this helps us to understand more totally that it's not going to happen. March 21 contract open interest in total was 47,054 contracts. If all of these stood for delivery at the close Thursday, the COMEX might have a problem, as this would represent a demand of 235,270,000 ounces, or that's 5,000 ounces per contract. However, history shows that this won't happen. Instead, total December 20 contract open interest with 3 days ago was 43,193 contracts. However, only 9,444 ended up standing for delivery. That's it. On first notice day, and when all was said and done at the end of December, the total number of deliveries was 9,337, which is less for about 47 million ounces. Total September 20th contract open interest for 3 days ago was 43,375. Again, though, only 10,548 eventually stood, and the delivery total by the end of September was 11,080 contracts for 55 million ounces. So that is something to keep in mind here, that these numbers, and obviously March is higher, but even if you did add up with these here, it's likely not to get that high, even if it's over 11,000 or whatever. Total July 20 contract open interest for 3 days ago, was 39,224. More stood in July, with the total being for the first day, notice day of 16,834. Deliveries by July reached 17,000 contracts for 86,470 ounces. So here's the point. If there was just as many contracts still open at this time during the previous 3 cycles, why would we expect some outrageous number of contracts standing for delivery in March? Additionally, if the COMEX could survive up to 86 million ounces of delivery demands last July, why can't it handle a similar amount next month? The point in writing this is to not discourage or frustrate you. It's just that the likelihood of a COMEX collapse in March is extremely low. If you're going around hanging your hopes on this one-time event occurring within the next 30 days, you are likely to be disappointed. That's just within the next 30 days. You have to look long-term, and I'll more on that in a moment. Frustration, despair, disappointment, and capitulation are the last things we need right now. Instead, if we are to defeat the banks and force a change in their fraudulent pricing scheme, we need persistence. As we wrote earlier, the only way to effect change is through a forced deleverage of the system, and only the removal of metal from the dirty hands of the banksters can make this happen. Therefore, we must not get discouraged when the COMEX doesn't fail in March, and likely it won't. We must instead redouble our efforts in acquiring the physical metal. And then it talks about here a previous posting here. It's time for every investor in precious metals to understand there's only one way to force a change. Direct acquisition of physical gold and silver can accomplish the changes we desire. And look what's happening to the premiums. Are going very high because supplies are limited of product, not silver, but product. In other words, rounds and bars and coins, and getting tough. So anyways, it goes on to talk about this here. And so let's look at this and what they're saying here. Every ounce that you physically secure for yourself takes that ounce out of the hands of the bullion banks, thus stretching their leverage even further. It just takes a lot longer for that to happen. At this point, their system will be stretched too far at the edge of failure. It's hard to say, but that day is most certainly coming. The more this is sustained, the change is likely to materialize out of the physical delivery default. This won't emanate from New York, and it likely won't begin in London either. Instead, look for delivery defaults to begin in the unallocated accounts that are run out of Perth, Montreal, and Zurich. One day soon, a customer will arrive at one of these locations and demand immediate delivery of the physical metal they have been led to believe they hold in their unallocated account. When that customer is even told their metal is not on hand and that they must wait 90 to 120 days for delivery, an old-fashioned bank run will follow. As with any traditional bank run, within a fractional reserve system, banks will close and a holiday will be declared. Will those customers eventually be made whole with the delivery of physical metal? It's highly doubtful. And that's going to be a long time down the road, though. So how does this happen? How do you break the COMEX? It's through physical silver demand and delivery that we outstrip the already stretched global physical supply. Buy bullion and coins, drain and take delivery of your unallocated accounts, utilize the SLV only for trading purposes while making long-term investments in funds like PSLV and CEF, which are guaranteed to hold 100% physical metal. Now again, it's their product. They're going to say that. And of course, I believe it probably is more likely that PSLV is backed by the physical. But nonetheless, only physical demand can free us from the bondage of the criminal bullion banks. Don't fall for the hype. Educate yourself. Be persistent. Take delivery. And I can assure you that we will prevail in the end. But what is that end? That's the thing I'm getting at here. It's going to take a lot of time to come at this, and it's going to be something we have to really be persistent on. But you have to be persistent on and have the stomach for the high premiums. Are these premiums, are you comfortable with those premiums? And because they will be sustained and they will further separate themselves from the spot price for a long enough time that people will get discouraged from them. We're already seeing places like Provident Metals, Atmex, and other bullion dealers starting to get more silver supply in stock. They can make more. They will front more, and you will buy it. Will you buy it? I don't know. These high premiums, but in order to break the COMEX and the banks, it literally has to be sustained. And it may take 6 months. It may take a year, maybe even 6 years. Who knows? The thing is, it's got to be sustained for quite a long time. It's exciting to see new folks in this accumulating silver, but don't ever buy anything you don't understand. And if you're going to be sending a message, the biggest message you can send is that which is going to protect you over the long course of time, not necessarily sending a message to the banks. Although I don't fault anybody for wanting to do that. I understand it, but I don't want you to be left holding the bag and them getting the last laugh on you. If the prices fall, demand falls, and you paid a very high premium and you go to sell it, and not only have you lost that premium, but you're being paid a couple of dollars under spot for each ounce of silver that you own, because there's a flood of supply that from others like you have been jaded by this process. That's my biggest warning that I can't help but drum into you guys as you look at this market. And when you see that this Ides of March with these silver daggers have failed this time, who knows what's going to happen in May? It may fail again. Be strong if you're going to continue to do this and keep that message there. But nonetheless, press on. And accumulating silver and gold, I think, is a good thing in the long term, because it will far survive the fiat currency that we have today. I hope you found this video useful. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.